Good afternoon and welcome everyone to the Trading Talk Uncensored live Q&A session. My name is Danny and I will give you the webinar today. The first step will be, as you can see, this is a live Q&A session. That means that this is a live webinar and we will, it's recorded and I will explain about it in a moment. Okay, the purpose of this webinar is to give you guys the opportunity to ask the questions that you want related to trading and hopefully to see the answers on the screen. Now the first part, as you can see here, is just the previous questions that we received. We'll go through them and try our best to answer. The second part is, as I have explained, we are giving you guys here a chance to ask your questions freely, and we will paste them down here and we will answer them as well. That's the second part. The third part is more informative, just to help you find this things in the website. So instead of searching, I'm just going to share with you the links here and you can directly get to them and save the time. And lastly, we have analysis. I guess in the past webinars, and I guess this in this webinar as well, we will cover analysis with the questions. So this slide here, we're not using it too much, but we'll see if it's necessary. So perhaps we'll add also an analysis segment, but I have a feeling that the questions will cover that anyway. Any capital markets and trading information disclosed in this webinar is provided for informative purposes only and should not be constructed or applied as an investment advice recommendation or a suggestion. Now, furthermore, as I have explained in the beginning of the webinar is recorded. So even if you've missed a part, even if you need a recap, you can just go to our YouTube channel, and there you can find a huge library of webinars, different topics as well, not just the live Q&A, but also analysis and really a lot of helpful things that you can find and enjoy. We will begin with the first question. As I said, the beginning is just the previous questions that we received. And the first question is, how can I receive signals to my phone? Okay, so we can take the question just like that, and we can paste it in our notepad in a moment. Okay, and in our notepad, we will also launch the WebTrader. This is, by the way, this platform here is on the website. I haven't downloaded or I haven't installed anything. It's important to use either Google Chrome or Mozilla Firefox. With a regular Explorer, it's less recommended. And you can see that this is very, very accessible. We have all kind of helpful things here, which we will cover on the way. And at the moment, as we can see, the question is, how can I receive signals? Now, the signals can be found to the left as part of those icons that we can see here. So really quick, the primary one allows us to see our details and information and account details and all of that. Underneath is trade, where we are at right now. We can see the charts. You can always go back to that screen by clicking on the AvaTrade's icon. It's clickable. If I'll click it, it throws me back to here, the default screen. This is how it's supposed to look like. Sometimes it's like that with a chart all the way up, but okay. And if I'll keep going down, in here I can review all my positions, in here all of my orders, in here history, and now the signals. We will maybe go through the others that we have here at the bottom, but at the moment I'd rather focus on the question. So in here in the signal section, if I'll click it, unfortunately I'm using a computer, so it's a bit difficult to show you how it would look like on the phone. But on the phone it will look very similar. The difference that on the phone you're gonna have here between the it depends how you're holding the device, but you're supposed to have a toggle here, like a tiny button here, that you can enable to receive this signal. You see, this is a signal. That is a signal right now. And if I'll click it, it will open with some analysis here. Okay, we'll go through that, but I'm just now explaining how we can enable this on the phone, right? We'll explain about the signals in a bit. So what you need to do is you need to click on that button you have here or here, okay, on the phone, and you can enable, just a second, I'll write it down, to receive it's called signal notifications. Again, I don't want to explain in particular because everybody has a different device. One has an iPhone, another one has a Galaxy or something else. So to receive signal notifications on your phone, you must enable signal to receive signal notifications. To receive notifications signals. Okay, that you can find it on your device. It's really, really simple. As soon as you click on the button, it already pop up with a message by itself. But the important thing is that you must enable it. If you want to receive the signals, you must enable it, and then your device can receive the messages, and you're supposed to receive this signal as a message. Okay, so does the other signals as well. It doesn't really, I used USD CAD as an example, but it's the same for the others as well. Now, what exactly, there are two ways to get on the signals. There are two ways. As you can see, this is one way. We went to here. This is the signal section. As I have explained, if I'll click here on AvaTrade, I'm going back. And there is another way to do it. So one way is through the signal section. The other way is to just search whatever you want. Let's say gold as an example. And when you have it on, you see we have a list here. We see copper doesn't have any signal. This is the sign. This is the sign to see if it has a signal or not. You see it's similar to the signal section. It's almost the same. This one is slightly bigger, but you get the point. So we have copper, it doesn't have it. Silver, it doesn't have it. Okay, and gold, it does have a signal. So what will happen if I'll click on this lightning here? Okay, we can click proceed. This is not AvaTrade giving me the signal, but it's Trading Central. Completely fine. Let's click continue. Okay. And at the moment, okay, when we clicked on this thingy here, we get the signal. We get the signal, and it's exactly the same way that I would have done from here. The difference is, if I want to trade a particular asset, and I'm not sure if it has a signal or not, to find it in the signal section, I have to, let me just show you. I'll click, and then I can either manually look for my instrument in the categories or scroll down through this very long list. Okay, so I can go to commodities and I can go to, you see, gold happened to be here. Okay, but the ones that looks like that, it means that they don't have a signal. Okay, so the advantage to do that from the outside, as I showed you, to search what you want, that gives you the ability to see if your instrument has a signal and then to use it. Okay, if at the moment you don't have a particular instrument but you want to see what signals are available, you can, like I said, go to here and just manually search for what you prefer the most. Now, if we go back to what we saw, and let's maybe use it from here, it doesn't make a lot of difference. You see that sometimes we have this line here instead of the actual value for take profit and stop loss. Okay, I'll explain in a moment what that means. And we can see that if we click it, if we try to use the signal, it doesn't let us. And we have a message here, the market has already reached a key level. Okay, from that I understand that this signal was produced in a certain timestamp, okay, which we can see here. This is when it was produced. And it had an initial price. This is the initial price. This is what the signal was based upon. And we can see that this is a cell type. This is a cell type, and in a cell type, that means our intention is that the value will decrease. It's also advisable to match the validity written here to the charts to better see the time frame we're looking for, because at the moment we're looking at 1 minute. 1 minute, each candle here is 1 minute, right? If I look at the timestamp, I just enabled the crosshair to do that. We can see that this is 2:14, 2:13, 2:12. Okay, you get the point. And this is a different picture than what we have here, because in here, each candle is a day. So let's quickly switch to days. Okay, I can scroll down or click here on the toggle and scroll it down, then click 1D. And to squeeze the chart or extend the chart, I must first click here at the column price. So everything's to the right, consider the column price. I can just click and drag down and then get rid of this line here. And then we can similarly place the levels that we want. 76.6 is somewhere here, a little higher. Okay, and we can see that it's already the signal here is already passed. It's already reached a key level, okay, which was 74.40. 74.40, and another line at 73.45. Okay, and the last we had 75.95. Okay, and as you can see, it's no longer valid, and if we'll try to use the signal, it's not going to let us proceed. It will let us get to the order entry, but it's not going to let us use the signal. Let me just quickly show you. If I click here buy, then we don't get the take profit and the stop loss that we would have had with a regular signal. Let me show you. If I'll take gold, gold has a valid signal, even though it's in a buy type. So that means that we're aiming for the price to increase. And if we see here, if I'll use the buy or the sell, let's use maybe the buy, we get automatically take profit and stop loss. What exactly take profit and stop loss are? Well, what they are is they are pending orders. And pending orders are orders that we can define a certain value on the chart. Just a second. I am matching the numbers to the lines for you guys to visibly identify the take profit and the stop loss. Just one more moment. There we go. You see, so now we have the levels aligned. We have 27.85 and 27.62, and this is our take profit and stop loss. Now, of course, I can modify the lot size if I want, as an example, and I can also modify the ratio if I'm unhappy with what's happening here. So let's maybe, we can also fix the ratio, but you don't have to do that. Okay, if I don't want to change anything, to use the signal is very simple. I just need to make 3 clicks. So this is the first, this is the second, and the third will already launch a position for me. Again, I took oil, it's something else, but you guys get the point. The process here is so simple. Okay, so again, let's go back to the default screen. And if I want to go to the signals, I can click here or click here. Okay, and then to pick what I want. So, oh, I think the Brent oil just now got a signal. There we go, you see? So this is a great example to show you that even if there was a signal and it wasn't valid, because it's already passed, you see that it was renewed. It was renewed, and now we do have a signal, and this time I think the previous was a sell as well, right? So now we get a new signal. Yeah, this is very, very simple. I think we can proceed for the next question. I'm just going to sharpen what I said with the take profit and the stop loss. So basically what the take profit and the stop loss are doing is they're stopping automatically at the price that we decide. And since we decided to go for 27.85, and let's remember to match the validity of the chart. Otherwise, we don't always have access to the same levels because the chart is different. And now when we're looking at days, okay, so as I've explained, take profit automatically stops the position with the profit. Stop loss automatically stops the position with the loss. And what I wanted to tell you guys is that with a buy, the take profit will be higher. That means that our intention is that the value will increase. When we are with a sell, the take profit needs to be lower because we want the value to decrease. And when we are with a buy, and God forbid if the price goes down, goes against us, then we'll have a loss. Okay, just quickly in 20 seconds to sharpen those basics, and we can easily proceed. To enable, to receive, you must enable messages on your phone. Okay, and of course you must also enable it on the website, right? Log in to avatrade.com with your email and password, or the app. It doesn't make a difference. The app or the web trader, they're both showing similar interfaces I've explained. And password, go to the signal section, and then you can do what I wrote here. To receive signal notifications on your phone, you must enable messages. You must enable notification messages on your phone. Again, I don't know the exact definition of on how it's called because everybody's using a different device, right? Let's take that and paste it down here and maybe make it a little smaller so we will know the difference. How can I decide what lot size I need on a position? Okay, so the best exercise that I can suggest in this case is very simple. What we can do is we can customize the lot size to be 0.01, and then we can simply, let's use a different instrument because I want to diversify as much as I can. Let's oil, maybe oil is not bad. Let's go back to the default screen because the analysis here, as you can see, the toolbar here is limited. Keep in mind that if you're using the signal section, the toolbar is not the same as the, let's go back. Okay, as the regular interface, as the default interface. You see in here, it's more expand. Let's take something else. We were looking at oil. Let's go to energies and oil. Okay, let's expand the chart. When you expand the chart, the list here goes to the left. And then let's also change. Let's change also the time frame. Okay, and like I said, the best exercise that I can suggest to decide the lot size is very simple. We can just take it down to the minimum, 0.01, and make a quick comparison with the take profit and the stop loss. So for instance, at the moment, we see that the lot size for oil is 1,000. If I'll place here 1, we see 1,000. Let's also click on the take profit. Let's also click on the stop loss, and let's enable the execute when price hits to bound the entry price. Because at the moment, if I'm not going to do that, and the market will keep moving, what will happen is my result here will keep fluctuate when the market will fluctuate. If I'll click here and then I set a certain target price to enter the position, like this is an example, then if the market moves, it doesn't make any difference because I've already targeted my entry with a pending order. So we have 3 types of pending orders. Execute when price hits does exactly what it says. It execute when the price hits. Take profit, close it with a profit. Stop loss, closing it with a loss. And the way that I'm going to design this is with one lot, I'm just going to extend the price from my entry by $1, and I will decrease also from my entry by $1, and then I can see that because I have 1,000 units and my between my entry to the take profit there is $1, I can make $1,000. Okay, and then let's just maybe make it a little smaller, just a little smaller for us to see. Okay, it's not what I expected. Maybe like that. Yeah. And then we have 73 as take profit. And just a second. It's really for us to understand. None of what I'm doing here is mandatory. It's only because this is a webinar and I'm showing you guys. But this can be, helpful not to wake up to the to a new chart, but to remember what analysis you did. You can leave all kind of notes to help you remember. See as an example. And then what we have here is we have, okay, as I've explained, you can test the lot size by placing here 1, or in a moment I'm going to show you in here. If you go to instrument details, you can also see the lot size. But at the moment, if you place here 1, it's going to show you. So it's easy and it's useful. Now, if I make the comparison between my entry, again, the current price is 72.5, but I've targeted 72 to enter the position, a pending buy. Okay, this pending order will acknowledge what's here at the top. So if it's a buy, it will be pending buy. If it's a sell, it will be a pending sell. Now, since we have 1,000 units and it's $1 away, it will benefit or lost $1,000. If we only had, okay, 500 as an example, then it would be $1 versus 500. What about if it would have been 50? So again, the same thing exactly, because we have 50 barrels of oil, 50 barrels of oil over $1 difference, we can make or lose 50. So Danny, how does this help me choose the lot size for my position? Well, that depends what the targets are. That depends what exposure you work with for the stop loss and what profit you're planning to make for the take profit, for the possible profit. Therefore, if my intention from this position is to make whatever amount I want to make, let's say 500 for now, okay, $500, what I need to do, I need to either increase my barrels, my lot size, so let's say 500, like that, Or I can extend, I can keep it like this, and I can extend my take profit. I can extend my take profit to increase my possible profit. And from that, we understand that when we buy or sell 1 unit and it moves $1 up or down, we can make or lose $1 per unit. Meaning what I showed, right? $50 over $1 gets us 50. 500 over $1 gets us 500. What else I can do is I can extend the take profit, and if instead of increasing it by $1 like we did, we increase it by 10, we get the same result. And now instead of the target 72, we can get, well, it's a little ambitious. Okay, we can also, to make it just a bit more realistic, instead of extending it by $10, we can extend it by $5, sorry, so that's 77, yeah. And instead of 50, we can make it 100, like that. Okay, and then we get the same result. So you guys can play and balance between the take profit to the lot size and decide whatever lot size you want. Just keep in mind that when you increase the lot size, you also increase the margin requirement. Okay, and that's something important you want to pay attention to. Let's go back to one lot. Again, we're just making a comparison here with one lot, and let's also bring that back to where it's been. Okay, and we can see that now with 1,000 barrels. Just a second, let's write it down. I think let's write it down quickly here. So we've got one lot equals 1,000 units, and then we have price per unit, which equals 72.5. Number of units is 1,000, and yes, that's enough for us to make the calculation. We're only missing here leverage. So leverage is 1 to 10, and what leverage does is it multiplies buying and selling. And if we take the number of units, sorry, let's first take the price per unit, and we multiply that by number of units. Okay, so multiply. Number of units equals value, right? And if we go value divided by leverage equals margin impact. Okay, and to avoid any confusion, I'm just gonna do it with you now. So we have 72.5 times 1,000 is 72,000. Okay, we don't have to, if you are using the web trader, you don't have to use this equation because it's already written here, right? But if you're using MT4, MT5, it's useful to know that. Because again, the margin impact is the necessary amount. This is the necessary amount to open the position. And why is that important? Because when I don't have enough margin to hold a position, my position will be closed. And since we are 1 to 10, so we're going to take that and divide that by 10, just like the equation here, value divided by leverage. So our value is this, our leverage is that. So value divided by 10 equals 7250. And that is just great. So now I know that if I want to make $1,000 with this position, with $1 away, I know that it requires 70% of the margin that I have available in my account, right? So the lot size is something, there are a couple of things you need to consider. A, what do you target to make or lose on the position? This way you can design the size of the lot size. Let me also show you how you can check it without placing here one. But again, it doesn't really make a lot of difference, and I suggest you'll use this comparison. But if you don't want to, you can go to instrument details, and it's written here lot size 1000. But I think, to my personal opinion, that making this comparison is great. You can begin with maybe the bare minimum, and then you can climb up, or you can go one and see what one lot size is. And that is enough to answer the question, I believe. So let's take everything we have here. Let's see if we can make it. I highly doubt that everything will fit into the presentation, but let's give it a try. Highly doubt it. Yeah. Okay. That's a mess. Maybe we can make it a little smaller, and then it would make a bit more sense. Let's try that. Yeah, not really. We have to. But as I said in the beginning, guys, the webinar is recorded. You can just go to our YouTube channel and to better understand what I did here, because it's very difficult to place it in the presentation. But I think, yeah, that's enough. That's quite enough. All right. Can automated trading be a permanent solution? Let's look into that. Well, of course, in this time, in this year, 2025, everything is possible, right? Only missing is the weekend fly. But other than that, I think now we can do everything. Now, to make automated trading a permanent solution, right? So how this can be done? Well, the best metaphor to use for this is to try and imagine a Tesla or a smart car that drives by itself, right? Okay, not the SkyDrive, but the autopilot car, right? That means that you don't even have to be in the driver's seat, but the car takes you anywhere, and it can also park and all of that things. Now, as you know, sometimes the car can bump into unexpected things. So similarly, when you're copying another trader, or you're running on an automated system, so this can happen as well. And why? Because the market is alive, and there are always new things, unexpected changes on the charts. If I'll use, just as a wild example, what we have here, we can see that the market will never stop to bounce, right? What was interesting, right? We can see that everywhere. So to make an automated system, automated trading permanent solution, you gotta be also lucky, and you need to find the most stable trading that you can copy. Meaning, there are few solutions. One solution is software, okay, based on scripts. We're not going to explain about that. We don't have the time. Okay. And the other solution is copy trading. Copy trading based on link my account to another trader's account, and basically what it means is that my account will copy whatever this trader is doing. So if it can be a permanent solution, that depends if this trader that I'm copying will permanently make profits. So my account will do the same. To be honest with you guys, statistically, how good that is, I don't know how to measure that, because I think that adjustments needs to happen anyway. Okay, I think that to copy someone, it can be great, but as I said, everything needs to be modified every now and then, and it's difficult to grasp a magical formula that will always maneuver with the market. It's very difficult, and I'm not sure if it's possible or not. I'm sure some people in the world are much smarter than I am, and maybe have the capability of design something like that. But I believe that because the market is dynamic, and I can just show you. Let's go into the economic calendar real quick. Okay, just a second. To show you this, and as I've explained, at the moment, if we're looking at automated trading as a permanent solution, it needs to be stable enough to stay permanent. And I'm not sure, personally, I'm not sure if I ever seen anything, a formula that works permanently under all market conditions, under all fluctuations, and make consistent profits. It's possible, but again, personally, I'm just not familiar with it. Of course, if people would like to share that with me, I'm happy to hear. So for that question, I will write here an answer, which unfortunately, again, I don't know. Since the market is dynamic and affected by different fundamentals, to make a permanent formula. Again, I don't want to write here an answer that it's not possible, and then some genius will come up with a formula for that. But again, I think that, to my personal opinion, it's just not it's not that doable. So since the market is dynamic and affected by different fundamentals, it might be very difficult to design a permanent formula that will handle all market fluctuations under any market conditions. Maybe at some point, who knows? What is fundamental analysis, and how can I use it in my strategy? You see, this question is the answer to this question. So what is fundamental analysis exactly? fundamental analysis, let's use the slide here as an example. Fundamental analysis, okay, is basically everything that is not in the charts, right? So fundamental analysis can be reports, news, articles, decisions. So I can write down technical analysis just to make a difference, right? Technical analysis, analysis from the charts. So that means numbers, averages, statistics. Statistics, right? And indicators that we can include, and fundamental analysis will be the opposite. Okay, that will be analysis from outside the charts. Outside the charts. Like I said, there can be news, decisions, reports, basically wars, God forbid. But anyway, you get the point. Anything that is not in the charts, we can include in the fundamental analysis. Just be careful that when you're consuming the fundamental analysis, you're going to go through articles and news and all of that. Just make sure that you're using a reliable resource, and you don't just read somebody's opinion that might be this way or another. You want to go for a reliable source, either our website or Bloomberg or anything that is official, and the fundamentals are viable and not just, like I said, an opinion or some discussion, and it's not really down to earth. So just pay attention to that. Now, how can we use it in our analysis? So let's suppose that if we use the what do we have? I think the next week we have the NFP, right? So we have NFP. NFP is the non-farming payroll. Why is this so big? This font here is not computable. Maybe we'll use this one. This is 20. Let's make it 10, like this. Yeah, that works fine. Now, just a second. NFP, right? Non-farming payroll. Okay, and let's use the moment. Let's use forecast. Let's say this is just as an example. You guys can go to Google or to our website and check the real numbers. But at the moment, I'm just using the slide to give you guys an example. Actual will be still question mark. So we have the forecast. We have the previous also. And let's make the previous just let's make the previous maybe 200,000. Okay, and how can we use this? Now, the NFP, the non-farming payroll, is all the new jobs applied to US besides agriculture. Right? Sorry. And then what we understand from that is, because this number that I wrote here, 200,000, if there are new in this month, this reports come every month at the first Friday of the month. That's the NFP, the non-farming payroll. How does this has any effect on the market, on my trades? Well, because it's showing us how many new jobs were created in the US. And the more jobs we have, the more people are working and manufacturing and paying taxes and keep this wheel of economy rolling. That's better for the dollar, right? Less people, less jobs, that means that the economy is less driven. So how can we use it to our analysis? Well, if the previous was 200,000, now the forecast is that there will be an increase, okay? And the actual will be the result, right? So let's suppose that the actual is going to be as much as the forecast. This is still positive, right? This is still better than the previous, okay? It's as much as the forecast is, but it's higher than before, which can show a positive movement for the dollar. How can we use this in our analysis? If we go back to the website, and I'll open the default page, and in the default page, let's maybe let's, you know what, let's keep it like this, and then we'll have the USD CAD, and then we have USD, maybe Euro USD, and we'll also have the pound against it and the yen. And now all of those currencies which are against the dollar, okay, I can use the analysis that I've acquired from the NFP to trade my other currencies, since all of those currencies are against the dollar. Of course, before I'm taking a buy or a sell, I must confirm the fundamentals for the other currencies, because if the dollar had good news, and I'm going versus the let's say the yen as an example, yen might also have great news, right? And then it will make the chart look different. So if one currency is strengthening, okay, remember that when you are trading any currency, the primary currency is what is the let me just take something else. Okay, let's stay with this. Just expand the chart because I can't see anything. Right, so that means that we need 1.4 Canadian dollar to have 1 US dollar, right? This is why the value is 1.4. If we'll take Euro USD as an example, the primary currency here is euro. So we need more than $1 to have a euro. And if we go back in history, I don't know if you guys remember that, but there was a time that they were equal. Yeah, but you get the point. I don't want to dive in too much into analysis, but you guys get the point. You can see the result. You can go see the event, see the result, see we have previous forecast and actual. Of course, if the actual would have been negative, so let's say like this is an example. Some may say that I exaggerate, but again, this is just an example anyway. If the actual comes negative, not negative, again, this is compared to the forecast and to the previous. So what can I expect? I can expect the market to react the other way around. And I don't only need to trade different currencies. I can also look at gold as an example, because gold also responds to when the dollar is moving, and other safe havens as well. It's really, really diverse and it's really expand. So this is why I don't want to dive too much into it. I just want to explain about the question without anything too complex. but I use the NFP just as an example. There are many other events that you can use. You've got the earning seasons, which is 4 times a year. You also have the interest rate decision, PMI, CPA, and the NFP, and other events that you can explore. But one thing that I would like to mention regarding the numbers. The bigger number not always brings good news. I'll explain what I mean by that. So at the moment, we're measuring new employment. The bigger the number, the more jobs they are. It's great, right? The more jobs, the better the economy gets. Okay, great. What if we are measuring inflation rate, right? So then in the inflation rate, the bigger the number, the worse it is for the economy, right? Because if the number increases, that means that we are in a bigger inflation, which can impact the interest rate as well. So don't always interpret the bigger number as good news. Sometimes bigger number means the other way around. Yeah, that's regarding fundamental analysis. And like I said, just use reliable resources and not just a random website on Google. You want to find information that is reliable, that is useful, that is current, and yeah, mainly that's it. I don't think we need to expand too much about the topic, since I want to also send you the links here, guys. Let's make it just a little smaller like that, and that looks perfect. Okay, so the first link is for the education section to expand your knowledge a little bit. If you want to learn more and watch additional videos and expand your knowledge. The other one is for login and make a deposit. The third one is for the help, the FAQ in the help center. The fourth is to make a real account. So if you're still playing with the demo and it's about time for you to get moving, you can make a real account and get down to business. And lastly, we have here the Academy, which also I'm going to show you now how to access it from the website for free. Now, if I'll fold it down and I will click here on this play button here, and I'll click on Academy, it's going to take me to the Academy. And of course, if I'll click on tutorials, it's going to open me the nice field here with all kind of tutorials, which I can just quickly start watching with sound and everything. And yeah, this is, I think, very helpful. There are lots and lots of content for you guys to use. Before we say goodbye, I also would like to grant you guys with the nice gift we give here, the promotion code. So you're gonna get a Q&A benefit that you can give to your senior account manager. And with this code, with this promotion code, you can receive a one-on-one premium market review. That means that you can watch the chart with your account manager and you can ask whatever questions you want and receive assistance live on the spot. I think there is nothing more useful than that, so use it and enjoy it. And yeah, I think our time is up for today. So I would like to thank everybody who joined us today. I hope that you've learned something new. I hope that the answers we had for the questions was helpful. So you're all welcome to join us next week. Until then, best of luck with trading. Have a fruitful week and have a good day.